Hey folks, Vic here with your weekly trade video for Friday, May the 22nd of 2026. I think you're going to really like this video. I hope you do. Most traders make support resistance way more complicated than it needs to be. In this video, Darko breaks down a really simple but extremely effective way to use the closing price of different time frames to identify high probability trading levels and with clarity and confidence. As you'll see it in this video, he'll go through a bunch of examples. But just remember this though, because price reaches one of these levels doesn't automatically mean there's a trade. He'll show you that in the video. The real key is waiting for the proper price action and entry pattern confirmation. And again, that's what you'll see in this lesson. This concept works with virtually any trading style. So if you're a short-term scalper or whatever it is, doesn't matter, any market in any time frame. So I think you'll find it quite useful. So here is Darko to explain the concept in detail.
Hi everyone, Darko here for a bonus video about the closing price approach step by step. We'll be recording for let's see here, it's Thursday the 26th of February 2026. Okay, so I posted this. The only thing that I changed, I just have one example, one for bullish and one for bearish. The context is the same, but some minor adjustments for the opposite for bearish, and the bullish is here, and I will cover everything in great detail. So basically this is support and resistance trading, pure price action trading, combined with everything else that we did prior to the closing price. The closing price is only adding more trading opportunities to our service. That's basically it. So closing price is support and resistance. So I will be covering section by section. So obviously this is the yearly chart. What do you do with the yearly chart? So whatever is in here, I will be covering that in great detail. The only thing that is changed for the monthly, weekly, daily, it's the exact same text. Okay, the only thing that's changed, this is for the year, this is for the monthly chart, this is for the weekly chart, and this is for the daily chart, but the context is identical. I just copy and paste it to the other ones. So let's just do the yearly chart, marking the two previous closing price to create a zone for the year, and then mark the closing price that is closest to the current price, because sometimes there is something in between those zones. Okay, and always notice when when price breaches the previous highs and lows. Okay, yeah, so I was just looking at if I change the yearly, let's see here, the previous month, previous week, and previous days. Perfect. Okay, so what I do with the yearly chart, and I could grab any charts I want. For the sake of this example, I'm just pointing out the Aussie Swissy. So this could be done for every pair. So I mark the closing price of the year of 2025. Okay, and I will mark the closing price for the year prior, and there is nothing here in between that I need to take in consideration. So this one was easy. Okay, because sometimes, like if you go to Aussie CAD and this is the yearly chart, I mark the previous yearly close, and then in this specific case, if I mark the year before, it's down in here. But if price is actually correcting, price could very well be reacting from this yearly close that is before the previous one. So sometimes there are levels that needs to be adjusted, because if the market closes in here by the new year, and then on the 1st of January we don't know if price is heading up or down. But if price is heading down and I have my line to the second previous, and then price comes up into this level and bounce, and I miss that trading opportunity. So therefore I need to look left, and there are times when there's like a headache, like geez, it's so many closing prices, and now that you just need to pick the strongest one. Okay, so in this specific case we have marked the previous yearly close, which is super important. And obviously if price is heading up, not down, Now you need to adjust. Okay, if price is heading up from here, where is the next closing price that is closest to where price is right now? Well, there is a neckline in here, a closing price. There is also another neckline up in here, and then we have this one in here, and there are some priors, and that's what it's time consuming, and you have to be okay with that. This is the yearly chart. Price don't like it takes time to do those things, and right now for this specific pair, we are watching the strongest level that price seems to be heading toward to. But sure, there are some levels here, closing price. So in this specific case, seems like, and this is actually a bit abnormal. Price did not correct, not even like a tiny correction. We just started the year strictly up, because usually 8 times out of 10, if not 9 times out of 10, we just see some retracement against the original bias. This is bullish, so you will see a bearish retracement, usually to any closing prices. Okay, and we also have a newborn neckline, which is like, a million times we've been seeing a retracement down to this neckline or this closing price, and then price goes up. Sometimes it's only a closing price, sometimes it's a neckline. That means a bearish candle followed by a bullish candle, so you have a neckline in here. And then you just create a zone for yourself, and that's basically it. Do not think that this is super advanced or super hard or super fancy. It's actually so simple that I almost feel ashamed to teach it, okay, because it's too simple. Okay, so that's how you should thinking about this. Do not complicate things and try to overdo and find new criterias. No. Do not add anything beside to what I'm teaching. So that's basically it. Okay, you create a zone, and now you have yourself a zone. If I go back to Aussie Swissy, now we have a zone. Okay, we have a closing price, and there is nothing prior to that. The next closing price is the prior candle. That's it. Okay, so that's for the yearly. So whatever was in here is covered. Then you go context. Okay, who is in control? Are we retracing, correcting? Well, this is bearish. We seems to be in a continuation mode. At some point we will see some type of correction, but there is no sign of it right now. The sign will be like a candle like this, not because this helped, but like if we see a bullish engulfing or an inside bar, one of my 7 candlestick formations, then we might be due for a deeper retracement on a yearly chart. Okay, let's move to the next section, which is monthly. Okay, so now you start of the month, we are heading toward the month of March. I could just stick with this pair, it doesn't matter. Okay, so let's just say that we are actually closing January, and February is just around the corner. We just make this up because this is the February candle. So for the month of January, you mark the closing price of the monthly candle of we just closed, and the one before, and there is nothing in between this zone that I need to mark. Okay, so now I have myself a zone. So now when you wake up the next coming trading day, it's the 1st of February, in this case the 2nd of February. Okay, so now this is fixed, and now we are going into a new monthly candle. Okay, so what happens is, if I go 2 time frames below, okay, this was the closing price of the month of January. This is February. We started to go down. The previous monthly we were bullish, right? And then price breaches the previous monthly high in this specific case. Okay, we breached the previous monthly high. If I go to my monthly chart and mark the highest point of that level and go back in here, we do see that this was the high of the month. Price retraces, breaches that level, comes down perfectly to the closing price of the month of January and go up. Okay, I've been seeing this millions of times. So now we are a couple of more days left for the month of February. We will be doing the exact same thing. Okay, this is a bullish candle right now. It's not fixed as I'm speaking, but that's how it's looked right now, and we mark the previous low. Is there anything in between the first and the second level? No, there's nothing there. regardless how much I zoom out. Okay, good. Is there any opposing levels that I need to consider? Well, we do have an opposing level. You see this closing price followed by a very huge candle that distinguished from all of the prior candles. The prior candle, because we don't see this back then, but now we do. Okay, so that means this closing price is something special. Do you see how when we closed this month, the next coming month, we saw a correction against the trend? Okay, usually price goes up to the previous weekly close. Okay, in this specific case we didn't do it. There might be a weekly level that is, you know, strong, or at least strong, that stopped price from hitting that closing price. Okay, so that's basically it. And then we look for trend is down. We seems to be correcting. Okay, so this is in a correction mode. We do want to see, okay, we are in a correction. That means at any time we hit resistance, price might be reversing and continuing the trend. Okay, and we do that usually around support and resistance. Like I said, closing price is in this case only resistance, nothing else. Okay, that's for the monthly. And we do the exact same thing now for the weekly. Let's see, what examples do I have? Euro Aussie. I have typed that I want to show you Euro Aussie on a weekly chart. Let's see here. Let's go to the Euro Aussie. There we go. We go to the weekly time frame. Okay, and you know the trend is down, price is heading down, but we are at some level of support. We need to know that. So let's just say that I'm starting the week just closed in here. Okay, now I want to go, I'm marking obviously the the closing price of this week, and we just pretend that we are here. Okay, I mark the closing price of this week and I mark the closing price of the prior week, and there doesn't seems to be anything in between. So far so good. Okay, so when the week starts on the 2nd of February. Okay, let's go to the 4-hour time frame. The 2nd of February was the start of the week. Okay, so we started the week here. Okay, now this is the market open. Sorry, here. This is the market open. Price corrected up. Why did we stop in here? Let's go back and see why did we stop there. Okay, let's see here. Price stopped there because there was, price hits the previous weekly closing price. Okay, so that's why price stopped there. Okay, so if I go back to the 4-hour time frame, this was a trading opportunity, but let's just say that we missed our trading opportunity. Now it's the start of the week, the week of February 2nd. Okay, and now price drops. When you drop, usually, not always, price moves in waves. Okay, this is one swing here, 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 and now we took we did a swing break. Okay, and when that happens, we just mark the closing price, and then we mark in this specific case, the trade was, if I go back to here, I need to mark, like, let's see, let's just do this properly. Okay, if I mark, this is the 2nd of February, the start of the week, and I need to mark the high of the previous week, because this is the closing price that I'm looking for, and this is the high where I need to put my stop loss. Okay, so this would be the entry, but the stop loss needs to be above the previous weekly high, unless we have a swing break in here or a natural stop. So the safest way is to put it there, but I usually put it above the swing, because I don't want this swing to get broken. Why? Because the structure will be changing, or the control will be changing from down to up. So if you don't happen to have a natural stop, you just use the weekly, the prior week's high. Okay, if there is a natural stop in this specific case, you just put your stop loss above in here, and price gets you filled. Price was not even close to your stop loss. Okay, and obviously, if, like, when do we use limit to BE? Sometimes price gets super comfortable between my entry and stop loss. Okay, so I usually make a decision, reading context. If price been hovering around this level too much, then I take things in consideration. I might use limit to BE, but I don't want to do this, too soon. But I read price, I read market. But the easiest way to use limit to BE is when price is challenging this swing high. When that happens, I would say almost 10 times out of 10, I'm using limit to BE, because price will come down to this level to pick volatility before heading up. Okay, that's basically it. That's for the weekly. For the daily, it's more for day trading or when you are managing trades and such. Let's go to Aussie yen daily chart. Let's see here, daily chart here. Okay, so let's just say that you are day trading and you want do something. The momentum is clearly, like, look at this. This is momentum, guys. Okay, so the momentum is up. Shorting is not an option. Okay, I mark in. Let me see where my second line is. Where's my second line? Come down here. Perfect. We go back to the daily chart. Okay, so the daily is closed now for this day. Okay, we started a new day. I mark the closing price of this candle and the prior candle, and in this specific case, is there anything between this closing price and this closing price that might stop price from heading to this level? Okay, well, I do see this neckline in here. It's closing price and a neckline. We had a nice drop and everything. Okay, so far so good. And now I want to go down to my entry time frame, which will be the hourly chart, and I need to build a case for an entry. In this specific case, I don't have the natural stop is down in here. Okay, so in this specific case, what I did, why this is a pending order, this is more like price breached the previous weekly high, and the closing price of the week should be the entry, but I hired it because this candle, when this candle closed, there was so much buying pressure, buying momentum, that we took out this swing. So price might not be coming down to the weekly. We might be stopping from the daily, and the distance between this candle closing and the weekly is tiny. So I don't want to miss a trading opportunity, and I have no idea if this will be a losing trade or a winning trade, and I couldn't care less. So that's basically what you do. You identify trend, you mark the closing prices of the previous day, candle number 1 and candle number 2, and you see if there is anything in between. In this specific case, there is. You could very well, if you just ignore the pending order, this is a bonus video about how to do things properly. Let's just say that you are day trading, and that's all you do. You mark this level, you wait for price to come down on your entry time frame. Okay, let me just remove this, and you wait for your structure damage. Okay, in this specific case, the momentum is up. Like, for instance, if this level was somewhere in here, well, I wouldn't wait for anything more because we already have the structure damage. I just want to enter with a low stop loss, but I need to have a natural stop. Sometimes there is no natural stop. What I do is that I go to, like, for this was a day trading example. So I go to my, let's just assume for the sake of this example, that I am interested for whatever reason that level doesn't exist. I'm interested to entering in here, and on my entry time frame, we just disregard that there is a natural stop in here. There is nothing there. So what I do is that I go to the candle's close, or the lowest point of that, not the close, sorry, the lowest point of the candle, and I make that into my natural stop. So I will and try to find something within the daily candle actions, high and low, closing and opening, to a candle that stands out to me, that looks like a natural stop. Then I just use that. Okay, so instead, back in the days, we didn't have this approach. So if there was no natural stop, there was no trade. That's not the case anymore. Now we look at each candle and try to find a level to put my stop loss, after that level, so I don't get stopped out and then price goes in my direction. So we very seldom a price does that to us anymore. So that's basically it. You mark the previous candles closing price. You see if there is anything before that level that needs to be adjusted, and you always need to notice when the previous yearly or previous monthly or previous weekly or previous daily candle, high and low, gets breached. Okay, that means new momentum orders, buyers or sellers, depending if you are long or short, had hit the market. So these are super important. So the first step is to mark the closing price and then adjust that line, and then always notice if a high and low is getting breached, and you put that candle into context. That's it. You do that on a yearly, monthly, weekly for position trading and swing trading. And if you are day trading or trying to manage your trades once you got filled, then you use the same thing on the daily chart. Okay, the hourly, the daily, and 4 hour is your entry time frame only for position trading and swing trading, and you wait for swing break. So structure damage means swing break. Okay, that's basically it. So now let's go to following ICP. Whenever you see ICP, that means identical closing price. It could be identical yearly to monthly, or monthly to weekly, or weekly to daily, depending which trading style you use. So each year, the end of the year, like the closing price of the year is always by default the month of December, a monthly closing price as well. So you have the yearly and you have the monthly. Let me show you what I mean. Okay, I can choose whatever pair I want. Like let's just continue with AG. This goes for every pair. Okay, so if I mark the closing price of the year, this is the prior year, the year of 2025, it's closed. 31st of December 2025, it's closed. When that is closing, and I go to my monthly chart, this is the closing price of the month of December. It's identical with the yearly. This level is the line in the sand for the remaining part, for the next coming year. Okay, this is January, this is February. Okay, so this is identical. Sometimes when the new month ends over the weekend, like let's just say the end of January will be on Saturday or Sunday, then it will be an identical monthly and weekly. Okay, so if I go to January, I mark the closing price of January. January happens to close over the weekend. So this is the last candle of January on a weekly chart. So now I have a monthly, weekly, identical neckline. Now it's February. You see the dates down in there. Okay, price came down to the identical monthly, weekly perfectly and went up. Why? Because the momentum is up already. Okay, so that's basically it. It's very simple. Like, you should understand this within days, okay, to apply that knowledge. The thing is that most people try to learn new things under stress. There is, again, I will be saying this millions of times. The reason is because people complicate things. Please do not complicate this. Mark the closing price, and sometimes the end of the month ends on a Wednesday. Then there will be no identical neckline on a weekly. Okay, then you will have two closing prices, one for the month and one for the week. Several times a year, the week, the monthly closes over the weekend, and then we just have identical closing price. Okay. And then you just build a case around for that entry. And so, just like the yearly chart, each Friday, like the closing price of this week, okay, this week started at the Monday, the 16th of February. So the weekly combined with the Friday is always identical. Okay, Friday is end of the week, trading week. And when the market closes, you got a weekly closing price and you get a daily closing price. So, and those are phenomenal for day trading. Phenomenal. Okay. And when the trend is clear, you put that in context. You mark the closing price of the week. You are a day trader. You mark the closing price of the Friday by default. And now you are waiting like a sniper. And there are so many great trading opportunities. You will get dizzy of all the pending orders. Okay. So the closing price was, let me see here. Where is Friday here? This is the Friday. Okay. So when we closed the market, that was the weekly and the Friday close. So this is Monday, goes down, there's nothing there because the trend is up. Shorting is not an option. This is Monday, this is Tuesday. For Tuesday, look at this, dude. We took out the previous weekly high. We established above that level. Okay, and you might say, okay, I just happened to pick this pair. It's a winning trade. You will have losing trades. Don't worry about that. Okay, so price comes down. Your stop loss needs to be prior to the previous daily low, up, pain free. And you might say that I'm just cheer picking this trade. Don't take my word for it. Go and mark, like, let's just say that you're a day trader. Mark every weekly closing price and notice where the Friday candle is and identify trend, everything that stands in here. Okay, trend, support and resistance, who is in control, are price correcting, continue, etc., etc., etc. And you tell me in the chat room the win ratio. Okay, it's impossible to fake the results because the closing price, the trend, and everything is there. You cannot fake it. Okay, and this goes for scalping, micro scalping. Trust me, I don't care which system you are using. If you understand this and you are a micro scalper, or if you are a scalper or day trader or swing trader or position trader, you will make more money than you ever made before. And you guys know that I don't hype, I don't BS, I walk my talk. I wouldn't say this if I wasn't sure. Okay? So there are endless of opportunities in the market, and this is one of them. So that's basically about everything you need to know about this here. Okay, the yearly, the monthly, the daily. Okay. Notice following typical scenario. I just deleted the other example. I couldn't find. 90% of the moves is this. I did one for bullish. It's blue, and made this for bearish. Okay. So and this is 90% of all trades. So this is how the market behaves. That's why it's predictable. That's why I came up with this approach. I haven't read this anywhere. I haven't stolen anyone else's content. I have never ever seen anything even close to what I teach about the closing price anywhere else on internet or in any books. Okay, I even Google it. Like I Google it, like, let's just see if there is anything out there around closing price, and I didn't find anything that is legit. Lots of BS out there, but I didn't find anything legit. Okay, so this is completely 100% designed by me based on what I've been learning for the past 20 years. Okay, this is the let's see here. I think I have a bearish move. Let's go to the bearish example. Obviously the opposite for bullish. Okay, so the market is bearish. The trend is down on monthly, weekly. It could be, depending on your trading style. The market is bearish. You guys all know what that means, and you are looking for shorts, obviously. So far so good. Okay, price starts with retracing deeper against your bias. So that means your bias is short, bearish. Okay, price is heading up, and throughout the week or weeks or days, it depends which trading style you have, price will be breaching previous structure like swing. Okay, and pulls back to the closing price. Okay, let's go to pound Aussie, and in this specific case, price did not get you filled, but there was a great trading opportunity. And you guys all know that I'm mostly swing trading. Okay. Yeah, let me see here. Give me 1 sec. Yes. Okay. We just pretend that this week is over, is closed, and now it's Monday, the 2nd of February, pound Aussie. Okay. So the market opens in here. Okay. This is the, and my bias is bearish, but price is heading up. There's nothing to do. I wait. I have marked the closing price. Okay. I have marked the closing price, and this is the start of the week, Sunday evening, and then Monday, and then price goes back, retest that level, bounce again, there's nothing there, and then boom, we have a structure damage. That's all what I want to see. Okay. So when that happens, the market, violate this structure, the entry will be the closing price. I do have a natural stop. I use that as my natural stop and take that. In this specific case, price did not come up to your entry. That happens. Okay. I can show you Euro Swissy. We took that trade. Let me see where Euro Swissy here. Let's go back to the weekly chart. Okay. Let's see here. Okay, I marked the closing price of the month. This was January. So for February, I was waiting. Okay, and this happens also to be these necklines or neckline and the closing price. It's identical because January happened to close over the weekend. So far so good. But now now it's February. Price is my bias is short, but price is heading up. Okay. So my bias was short, but price is heading up in February. There's nothing to do. I wait. Buying is not an option because my bias is short. Price comes down, retest that level again, bounces, come down, retest that level again, bounces, come down, retest that level, almost bounce again. Boom. Structure damage. Entry, stop loss. Okay, we got filled, and then we took some partial profit, and I exited the second position as well. I'm not covering the trade management. I'm just covering, how these sets up and what you need to look for. Okay. So let's see if I find a bullish example. Let me show you one more Euro Aussie. Okay. We go to the weekly chart. You could I'm marking this closing price, and obviously I will be marking the previous weekly, the prior to week, and this is the start of the week, and the start of the week happens to be 26th of January, and my bias is short. Okay, 26th of January. Okay, let me see here. Yes, so the market opens. Let me see here. 26. Here's the market open. 1 sec. Here, okay, you see the gap in here. So this was Friday close, market opens, goes against my bias. My bias is short, price is heading up, comes down, held that level again, and then we drop. You got your structure damage, price goes back to the closing price, drops. Okay, let's see. I think we have a bullish pending order as I'm speaking, and obviously, like I said, I have no idea. If I couldn't care less about the outcome. Okay, and this is right now. This is Thursday, so this weekly candle is not closed yet, but this one is. We closed on Friday. The week started on the 16th. Okay, I marked the closing price. It happens to be Friday's closing price as well. So let me see here. This was Friday. Okay, so I mark the closing price. I go 2 time frames below. Let's see when this week opened on the 23rd. This is Sunday. This is Friday. So this was the close. My bias is bullish, but price is heading down. Okay, nothing to do, and then boom, we took out the previous weekly high. And now I'm marking the closing price for my entry with a low stop loss. And like if this trade happens to be a losing trade, that doesn't mean that this is not working and I'm only like showing you stuff in hindsight. No, this stuff is working, and it has been working long before I was born. Okay, and I'm actually very surprised that nobody talks about this. Like, you know, because you always find like Head and Shoulders, and I call those like swim breaks, and there are like other patterns out there that is like well known, but I have never read anything about closing prices, like build a strategy around that level, those levels. So usually like find something similar when you search for something. But it amazes me that for 20 years of doing this, I have never heard anyone talk about anything around closing price, besides telling me that closing price is important, and that's basically it. So I don't want to make this too long. This is not a rocket science, okay? So obviously the PMAs, anything from February moving forward, will be drilling this in great detail, and I will be also make sure that we will upload this Word doc, and I will also post that in the chat room, and that's basically it. So the PMAs will be drilling, and I hope that you find this helpful. Do this for your own, do some back testing and follow my PMAs, and you should be just fine. It will sink in after a while. It should not take you that long. I would say within weeks you should be seeing some very noticeable changes for your trading. Thank you so much for listening, and hope you find this helpful, and I will talk to you in the chat room. Cheers.
So as you can see, this approach to using closing price makes identifying key support and resistance levels much cleaner and simpler and more objective. The biggest mistake that traders make, quite honestly, is just overcomplicating their charts and their analysis. Like, keep it simple, stay patient, wait for the proper confirmation on your entry time frame before taking a trade. Go over this video a few times and it'll sink in, and I think you'll find it quite useful. Remember, inside Darko's alert service, members get these important levels mapped out in advance, along with pending orders and ongoing trade management updates throughout the week. Hey, let me know in the comments what you think about this whole concept of using closing price. I'd be like to hear what your thoughts are on it. If you found value in this video, make sure to subscribe, hit the notification bell, and we will see you next week with another weekly trade video. Thanks so much.